Rivian stock went down 14.46% just after they reported earnings last week as they missed earnings, deliveries, and more. Hello everyone, welcome back to the channel. Rivian, the EV company, reported third quarter earnings last week and investors did not like what they saw, but have to say that many of us were actually expecting this to happen. Now, is this a stock to buy right now that it is down even more, or is it better to wait? Let's see what they reported. First of all, I have to say that their truck is very attractive. I have been telling people since I saw it on YouTube that if I were to buy a truck, I would want one of this, as what I saw online, not in person, looks incredible. With all that said, let's focus on the company and their financials, as that's why you are here. We know they were expecting a production of 1,200 vehicles for this year, but they were not able to achieve that as they were only able to produce 652 R1 vehicles and deliver only 386 of those. They announced that their normal factory, and that is the name of the factory, has an install capacity to annually produce 150,000 vehicles on the R1 and RCV platforms, and they plan to increase it to 200,000 vehicles, which sounds incredible, right? Also announced that they are building their second domestic manufacturing facility near Atlanta with a 400,000 targeted annual production capacity. They have 71,000 R1 net pre-orders in the US and Canada as of December 15th, which obviously is incredible as it shows that they will not have a demand issue, apparently, as they also have 100,000 initial order of their vans from Amazon. Now, they have 3 vehicles as well, which are the R1T, R1S, and the EZV. In comparison to when Tesla started, they started only with 1 vehicle, and over the years they came out with the second one, and now 18 years later we have 4 Tesla vehicles for sale right now, plus the Cybertruck and the Roadster that are not still on the streets, and all the semis and all that. All this looks incredible from Rivian, right? That they have a nice production capacity in the first factory, which is planned to have an annual capacity of 200,000 vehicles, and are already building their second facility with an estimated annual capacity of 400,000 vehicles and have a nice demand as well. So why is the stock going down so much, or why are many people saying that we shouldn't invest in this stock? And we have the answer for that. The answer for that is because we have learned that in this industry, what is planned or expected and what the reality is are two way different things. Because one of my questions here is, why would they build a second facility if they have not been able to even ramp up the first one to at least 50% of its capacity? Or are they really going to be able to produce 3 vehicles and build a second facility with what they have right now in money? According to them, launching 3 vehicles across 2 platforms during the first year of production requires simultaneous ramp up the supply chain, hiring and training of a production workforce, equipment bring up, and rapid iteration through production quality loops. Also, they mentioned that they missed production expectations mainly because of supply chain issues, which was kind of expected, not a surprise. Obviously, these should not affect them in the long term. We need to understand that Rivian is a startup company. They are struggling financially, which is mainly why they went public, but these struggles are expected. But the thing is that we need to understand what their plan is to overcome those struggles. Because if we check their financials, we can see that they report a revenue of only $1 million, but that $1 million was only possible because they spent $83 million. They had a gross loss of $82 million. $82 million in gross loss. And after all the other expenses, such as research and development and selling general and administrative, they reported a net loss of $1.2 billion with the B. Obviously, they are struggling financially. They made $1 million and lost $1 billion. We need to understand that margins are critical in this industry. As they are a startup company, they need to have good margins with time and way more if they want to expand as fast as they are planning to. Yes, I do understand that they are a startup company and that they just started delivering their first vehicles and that they have 70,000 orders already. I understand they are in the beginning of the S-curve, in which production and growth is slow and painful. Now, on their balance sheet, we can see that they have about $5.1 billion in cash and cash equivalents and a total of $8.4 billion in total assets. But we have to take into consideration that this does not include the $11.9 billion that they got from IPO, as the IPO happened in quarter four. Still, we can see that they have a nice balance sheet for now, as they have only $4.2 billion in liabilities. But we do have to take into consideration that they burned $1.2 billion last quarter, which is why it is nice that they were able to raise their capital with the IPO, as they really needed it to. But I believe that with the new construction and everything, sooner or later, they will need to raise more money, diluting us shareholders. I'm not a shareholder, but us shareholder. I say this because something we have learned from Tesla and the EV industry is that everything is so new that they are in process of learning in order to improve and continue innovating, that this companies needs a lot of money and time, and even more right now that they are trying to ramp up their normal factory to 200,000 vehicles construction capacity and build a brand new one with a 400,000 capacity with not that much money coming in, as remember that they only had a revenue of $1 million. And the truth is that they will most likely miss production in the coming quarters and some quarters in the futures. And I'm not saying this so when they don't miss, you come here and comment about it as that I was mistaken. I'm saying this because we have seen this happening before with Tesla and companies within the industry. I have to say that it scares me a bit that they are trying to grow and expand a little bit too fast. And hey, I'm all for high growth and fast expansion as long as I know that the company is able to do that, as they still need to show that they have the ability to scale their business. Now, I believe that this company could have a future. I think that they could do well in the future if they're able to scale their business correctly and achieve their expectations. I do have to say that we might see several headwinds in the coming quarters and years. My main problem here is that currently investors or retail investors like you and I believe that investing in Rivian right now is like investing in Tesla back in 2018 or 2019. Which the truth is that Tesla in 2018 was already delivering 245,000 vehicles and 365,000 vehicles in 2019. And investors believe that they will be able to double or triple their money, as many others did with Tesla from 2019 to 2021. And to be honest, they could with Rivian or any other EV company, but you have to take into consideration that they are babies companies right now in comparison to what Tesla was in 2018, 2019, 3 or 4 years ago. Many could say that these new EV companies could grow faster and expand faster than Tesla, as Tesla was the pioneer and this company learns from Tesla and their mistakes, which could be completely true, but I don't think they will be able to ramp up that fast or as fast as people believe right now, because as Elon Musk said himself on Twitter, one thing are prototype and another thing is producing them. Many believe that the market is overreacting to Rivian's quarterly earnings, but are we really? A company that was able to produce over 600 vehicles only but delivered only 386 of those? A company that reported a revenue of $1 million and a net loss of $1.2 billion and is worth with a market cap of $86 billion, even after the drop. You know how much growth is being priced in at the moment at this price? A lot. And to be honest, I would love to invest in this company, as I really like their product and their expectations, or what I have seen online from YouTube. And I believe that they have a potential in the future. But in my opinion, investing right now is a YOLO move. It is very, very speculative at the moment. You as an investor have two options. First, you could invest now, hold those stocks for the next 5 to 10 years, and if they're able to grow, expand, and survive, then it could go pretty well for you. But the second option is that you could wait until they are able to prove their ability to scale their business, that they are able to prove that they are able to do what they promised and played safely with less stress in your investments. I will wait. I already invest in growth and speculative stocks, as you know, but this is another level of risks. I really hope they are able to expand as they want to, because that would be incredible to experience and see in the market. That is why this stock is on my watch list, not because I want to invest in it right now, but to follow up with the company's news. But right now, I believe there are better investments in the market. I will leave you here a video of the stocks that I've been buying in this dip. Thank you and see you next time.